Hello and welcome to Pro Trader Strategies Market Commentary for Monday, May the 2nd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A lot of economic data coming out and a couple of bank holidays. Great Britain and Japan have a bank holiday today, so we could see a little bit lighter volume going on. But we had the Swiss retail sales came in really low, negative 1.3% versus a positive 0.3% expected. But the PMI in Spain, Italy, France, Germany, all of those purchasing managers indexes came in line with expectations. Here in the United States, we did have ISM manufacturing PMI came in at 50.8, lower than expected, but just above that 50 threshold, which shows expansion. So that was one good caveat. Construction spending came in lower than expected at 0.3% versus a 0.5%. And ISM manufacturing prices paid came in at 59 versus 51.0. So that came in quite a bit higher than expected. And I've talked about this so many times. As you can see here, basically all of April, we saw a ramp up in crude oil prices. That's going to be that major input into that prices paid for the manufacturing side. So these manufacturers are having to pay more to produce their products, and in a sense, since we're seeing these retail sales numbers and a lot of the other slowing down in the economy, that's really going to eat into margins. So keep that in mind. I've talked about just because crude oil is going up should not necessarily mean that the overall equity market goes up. If the crude oil prices are going down, then that should be, at this time, good for the overall economy, because we need to start seeing this train get moving before the crude oil for demand goes up. And when demand goes up for crude oil, then that's okay to see those prices go up, but not just when there's a lack of demand, seeing that crude oil go up, because that really starts hurting the overall economy and the manufacturers. So could really start eating into some margins there. On the overall equities, off of the lows, here is the chart of the NASDAQ /NQ, up 8 points on the day, opened up quite a bit higher, went into negative territory, and we have since rebounded decently. It's still pretty much very close to being an inside day for the most part. As you can see here, /ES, we have up about 7 points right now on the day. Again, they right off the open went into negative territory and have rebounded. Here's the breakdown of the daily chart. As you can see, overnight we started rallying. On the open this morning, we kind of sold off into negative territory and now have since rebounded. This doesn't look like it's as much of an inside day as what I kind of saw the NASDAQ. So E-mini S&P is up about 5 points right now. Onto some trades that I've done. JNK, which is the Barclays High Yield Bond Fund, ticker symbol, like I said, JNK. Just wanted to get some exposure to the downside. It's had some pretty much nice big rally, topped out here, it looks like to me, and was looking for this to come off a little bit. So on Friday, I went into the June and bought 35 puts for 65 cents. Right now it is probably better levels for you if you wanted to get into that. I think last I checked it was trading around 57 cents today, so it might be a better time to get into that one. On to Target. Target is something that I bought quite a while ago. I think it was back in probably very early May, late March, early April, late March, and I missed this sell off here. I bought the May 80 puts and ended up watching this go up and against me. Ended up covering that for $2.45. I think I ended up paying like around $2 for that, but I could have done a lot better had I covered that quite a while ago. But I held on to it a little while, and once I got this sell off, I decided it's right back there at the point of control. It's a good time to get out again. On to Microsoft. Microsoft is a trade that I talked about in my webinar on Friday, and trying to look for some trades. We did it on call spreads, getting long call spreads, because you can see it's got pretty low implied volatility. That's a point where we're going to want to put on strategies where we are buying calls or buying call spreads. Call spreads I like because you can kind of finance it a little bit with selling some of that call. You do limit your upside risk, but or your upside potential, but you limit your risk by selling that out of the money call. So in Microsoft, ticker symbol MSFT, I did the July 55 call spread for $1.47. So I bought the 50 calls, sold the 55 calls to help finance that, and I paid $1.47 for that strategy right there. On to the diamonds. Now, I did another webinar on Saturday morning. If you didn't catch that, you can go to protraderstrategies.com, and I did this wrapping it around Steve Primo's strategy number 4, and it's a really nice one. It actually, I have a really good record of results with this, and it's really working out nicely. So I even talked about this on the webinar. I said, hey, I bet on Sunday night we're going to get a indication that this is a buy from Steve Primo, and sure enough, today it came in as a buy signal as soon as it traded above yesterday's on Friday's high. That was the point to enter that. I kind of watched it come off a little bit, and that's when I put this trade on, and I went into the May and bought the 179.5 calls for $1.19. So now the idea there is it's going to trade up and to close test these 180s. So I went back and forth on doing the 180s or the 179.5s, and decided on the 179.5 for that one. I did it kind of small just because I'm overall bearish the market, so I didn't want to change my whole portfolio for just one indication. On to Caterpillar. Now, Caterpillar's come off a little bit, and I think that they have a little bit further to the downside to go. They've really missed out on earnings and didn't see much of a sell-off after those earnings. It's even rebounded nicely. Just don't really see it holding up here. I think it could easily come down and trade into this area here, which is going to act as a magnet, if you will, just because there's been a lot of trade going on there before the earnings ramped up and then disappointed. So I could easily see it coming down here, testing this area. So I did this with the June and sold the 82.5 call spread for 84 cents. So that meets my parameters on doing a short call spread. It has pretty decent IV percent. It's a little bit lower than what I would like to see, but I wanted to do a couple of strategies since I did quite a few that where I was paying for these different option strategies that I wanted to collect some premium here. So that's why I ended up doing that one and bent the rule on the 50% IV percent. So that's about all I got for you guys today. Friday's webinar is going to be on long put spreads. We did the long call spreads last week. We're going to be doing long put spreads this week. So stay tuned for that. Also, go check out Steve Primo's strategy number 4. It's really good, especially if you like to buy options rather than selling them. That was a good one, and they've been working out really nicely for me. So go to protraderstrategies.com and sign up for that, and check out Friday's webinar on the long put spreads. All right? If you can't take that, take it easy.